My next guest says the timing isn't a coincidence and that a major anniversary today could be the key to understanding China's motives. For more, let's welcome in Emily Parker, global macro editor at CoinDesk. Emily, welcome. Today was the 100th anniversary of the Chinese Communist Party. Xi Jinping gave a very aggressive speech. Do you think the crackdown on crypto was tied to this moment of chest thumping about the Communist Party and China's greatness and Xi's power over it?
I think it's quite likely that China would have cracked down on crypto anyway, but I think the timing is no accident. If you spend a lot of time in China, you'll observe that these big political events tend to, in the run-up to these big political events, there tends to be crackdowns of some kind. Sometimes it's of the internet censorship, sometimes it's crackdowns on anything that could be seen as causing social instability or political unrest. And I think in China, crypto fits into that category because it's a new industry, it's notoriously volatile, and new investors could end up losing a lot of money.
And when people lose money in China, the government doesn't really like it because they see behind every loss like that or behind anything that smacks of upheaval, they see social unrest. Wrong or right?
Right. I mean, I think what China does not like protests. This is a very well-known fact. And I think what they're concerned about are new investors losing money, taking to the streets to protest, and perhaps even blaming the government. You know, I think in China, some investors will think that it's the government's problem and it's the government's responsibility to solve these kinds of issues. And I think that's not something that Beijing wants.
China also doesn't like capital flows out of the country. And one of the things about cryptocurrencies is that it makes capital flow pretty easy.
Well, so that's definitely always been part of the China crypto story. So China has capital controls. You're not supposed to take more than $50,000 out per year. And yes, crypto does make it easier to get around capital controls. Now, we don't really have data indicating that there's many people in China using cryptocurrency to get around capital controls, but I think that's definitely a fear from Chinese authorities.
Go ahead.
Emily, where do we go from here? How important is China to the crypto sort of market overall, and what happens if China continues to crack down on individuals' usage of it?
That's a great question. It is important. China is very, very important. You know, when China cracked down on crypto in 2017, basically shutting down local exchanges, we lost a lot of data from China. So we don't know exactly what the size is of the Chinese market, but anecdotally, we know it's sizable. We know it's very important in mining. So yes, it would definitely be a loss, and we would probably see some short-term impact on price. But what we also saw in 2017, when China banned ICOs, when they cracked down on exchanges, it spooked the global market, but temporarily, and then there was a bull run. And I think that's kind of what a lot of people are saying. And, you know, in terms of mining, mining might actually leave China, but it will likely just go elsewhere. And it could even come to North America.
Shepard Smith here. Thanks for watching CNBC on YouTube.